Good morning. This is Mike Wade, and welcome to High Probability Short-Term Profits. What's the name of the show? Lots of things are going on in the marketplace. We want to talk about jobs. We want to talk about our two trades from last week. One of them, Ryan, came off in just 6 minutes. We nabbed about 10% in 6 minutes. 6 minutes. The 6 minute man. That was a really great trade. We have another one that's going to come off this week, probably for a profit. We have a new trade for today. There's actually a lot going on. It's earnings season still. And I was looking through the many opportunities that are available today, and I've got my eye on one, but there's plenty more. If you have any stocks you want me to take a look at, please pop them down below in the chat box. I want to talk to you about my Sniper Guidebook free giveaway. We want you to get that book and come out and hang out with me every Thursday at 9:15. And then, of course, we'll look at your stocks at the end of the day. So let's hop right in and talk about the markets. I'm going to pull up a chart of the SPY, the ETF that tracks the S&P 500. It's a stock. It has options if you want to trade options on this or even buy it. But things have changed recently. You remember here, I talked about this a few weeks. I've been talking about this for a while, actually. But, you know, the inflation is still here, right? Inflation hasn't really gone away. And we had some Fed governors come out. Michelle Baumann came out here and said, I know you all want rate hikes, rate cuts, but I think we might need a rate hike. The market's plummeted. We had a couple of other Fed governors talk about maybe no interest rate cuts. And then the Fed comes out and says no rate hikes coming this year anytime soon, or if over the next couple of years, probably no more rate hikes. So the market kind of liked that, but he didn't say much about rate cuts. The market wants to see rate cuts. So here's what happened on Friday. Right there, we had a jobs report that came out that showed that fewer jobs were added to the economy. That sounds bad, but it's good for the Fed. The Fed needs to see contraction in the job market in order for us to stop buying expensive stuff. Hey, Ryan, I went back to the States. As you know, I just got back last night.
Yes, sir.
Texas. And I hadn't bought anything there, a hamburger there in a while. And I went to Burger King and I bought an Impossible Burger because I don't eat no meat.
Mm-hmm.
And it was $9 for a freaking fast food burger.
Yeah, first of all, I want to talk to you about the first hamburger that you've had in a while was at Burger King. Like, we need to get you at Five Guys or something like that. But yeah, like the prices of just everything has gone up, I feel like. I mean, Burger King burgers going up, that's pretty crazy.
Yeah. And McDonald's too, all of them.
Mm-hmm.
So and people are buying those things, and so that's inflation. That's the impact of inflation. And in order for us to stop spending money on expensive stuff, there has to be some level of contraction in the job market. So we saw an indication of that there. And then just this morning, jobless claims increased. So that's really good news for the market. So the jobs market over the last two reports is showing contraction. The Fed's going to like seeing that. And then people are now going to start anticipating rate cuts sooner than later. So that's this dynamic we're in. And the jobs market is supporting that. We'll have further upside. Right here, let's see, that close there is all-time high close territory. And we're not far away from it. The trend is still up. If I take a look at the futures are flat on the Dow. The S&P 500 is pretty much flat, slightly up on the S&P and the NASDAQ. So I think we'll have some follow through, especially with this weekly jobs claims report. Now, do I really care? Well, yeah, I do care where the markets go. I want to have some level of edge, a prediction of where the markets might go. That helps me make choices. But really, at the end of the day, this is opportunistic trading. I call it snipers. That's my code name for this particular system. And snipers is about looking for stocks that move big on either really good news or really bad news. And then we sell a credit spread. It's pretty safe, pretty far away from the heat. And those credit spreads over history, the last 2 years I've been doing this live in front of audiences. We're at about a 90% win rate. Average gain is 10% every 7 days. And indeed, that's sort of where we're hanging out since I've started the Hub Show. Let's take a look at a couple of our trades. The first trade that we put on was on Etsy. Etsy came out with really bad news. I'm sorry, I shouldn't laugh. It's not funny. Well, it's good for us, but it's not really funny. The company gapped down on bad news. And in the morning, what we wanted to do to profit was to sell a credit spread. The stock was down here below 60, and we sold a 70, 71 credit spread. It's called a bear call spread or a short call spread. And that spread would make money anywhere below 70. So here was the exact trade. We sold 5 of the May 17 70 calls for 49 cents. And then we bought 5 of the Etsy May 17 71 calls for 39 cents, netted 10 cents credit. We did it 5 times. So that left us with $50 of credit while risking $4.50. So that doesn't sound like a good risk reward ratio to most people. But when you consider the probability of profit on these trades is over 90%, without even considering the bad news on the stock. So we sold this thing for 10 cents. The stock vacillated, and within 6 minutes, we ended up buying it back. You can see the prices here, the green prices. We bought back for a net debit of a penny and netted about 10% by the end of the day. No, not by the end of the day, after 6 minutes. So Ryan, our win rate, our win streak is now 15.
The big 1-5. Let's go.
Big 1-5. And Ryan, Carvana, which had really good news, gapped up, and we put our line in the sand at 90. And the stock's way up here. You can see the profit and the risk graph there. And unless the stock tanks over the next 9 days, all the way down from to 90, the stock's currently at 114. This trade will be a winner. All right, so this looks destined to become our 16th straight win. We've got strong support keeping the stock from dropping. And as time happens, this spread devalues, and we'll be able to buy this back for 1 cent, having sold it for 10. So this is our game. This is our sniping game. It's, the way I think of it is, Moneyball, the movie Moneyball, where we're not trying to get home runs here. We're just trying to get on base. Get on base, get on base, get on base, get on base. And if you take a look at our performance report, you can see some pretty cool numbers there, right? I've got it up here as well. We're operating at currently with our 15 straight wins. We have 100% winners. Our average profit per trade is 16% with an average hold time in the trades of 4 days. That's phenomenal. And that's actually beyond what we will get over time, because we will lose. We lose 1 out of 10 typically. We've been on a good run, and this number is really high, and it will probably drop to 10% over time because we do lose from time to time. So complicated? No, not really. We use credit spreads. We have a guide, and I really would like to encourage you to grab this guide. It's a 5-step process. I walk you through how to find opportunities, how to check the news, how to determine your lines in the sand, how to build a credit spread, and most importantly, how to manage those credit spreads. So grab the guide, it's free, and then join me every Thursday at 9:15, and you can sort of trade alongside me. Okay, now we have a trade for today, and it's on Roblox. You probably heard of Roblox. If you got a kid, you're around children. Well, when I actually mentored kids for a while, and Roblox was the game of choice for children. However, they just came out with an earnings announcement. Let me show you the chart here on Roblox. RBLX is the symbol. Let me pull this up for you real quick. So Roblox pre-market is trading way down here. Let me just check the current live price on Roblox. We can see it. RBLX is the symbol. I'm going to use Thinkorswim and place this trade live in front of you. I'm using the simulated account. And you can see here, the stock is going to open What's that say? 29-ish. So the stock's going to be right down here at the market open. All right. Bad news. Really bad news. Some of the news was that their annual bookings is dropping, muted player spending. So players aren't spending as much money on Roblox buying their tokens for various things, and the stock's getting hammered, just really hammered. So what I want to do here is go to the hub chart here. This is the software I like to do my charting with, and you can see, you can get it at hub.com if you're interested, check it out. But here's my line in the sand. So the stock will open right around 39 or whatever that was. 29 was it? Let me check again. Yeah, about 29. So it's off the charts. Here's the 200-day average. That's that dark blue line. I just don't think the stock's going to get back up above the 200-day average anytime soon with it trading at 29. And so I'm going to start by putting my line in the sand at 37. All right, that's the next strike above the 200-day average. All right, I'm going to put this in. Market opens in 4 minutes. I'm going to put it in and try to snipe a profit at the open. Now, 10 minutes after the open, the price I'm going to try to get will not be available. So one of the things you can do and take advantage of the way options are priced on bad news or good news is put them on before the market opens. And sometimes you can get really lucky and get a really nice fill that will be unavailable just minutes after the market open. So what happens is option traders come in, retail traders have placed their orders. It's like a veritable feeding frenzy with option traders trying to grab some Roblox options. So here's the trade then that I'm going to put on. Actually, I'll show it here. So this is the stock symbol is Roblox. We want to sell to open. The Roblox, May 24, 37 call. Remember, the 37 call corresponds to this line in the sand. All right, and then I buy the next higher strike call at 38, and I'm going to try to get 10 cents on this $1 spread. All right, let me put this order in real quick, and I'm going to come back and talk to you about how that credit there, that 10-cent credit. All right, so here's the trade I've got already teed up. I just showed it to you. I'll do one, well, let's do 5 contracts. If I do 5 contracts and get 10 cents, that's $50. And the risk would be $4.50, just like the Etsy trade. So I'm going to do that for 10 cents. The market opens in about a minute and a half, and I'm going to confirm and send, put that in the hopper that's sitting out there under working orders. And the market open isn't even open yet. Yesterday, that spread would have brought 70 cents, but because the stock has plummeted pre-market, we're not going to get 70 cents. I know if I get 10 cents, then I have a good shot at, well, I will have that's an 11% return. And so I want to at least give myself a chance to make 10%. So again, my rule that you might have heard me say a few times is get at least 10% of the spread width. All right, so spread width is $1 wide, and 10% of $1 is 10 cents. So that's my minimum. I'm not taking any less. I could leave it sitting there. If we get filled at the open, cool. I got a great trade that's most likely going to win. And then if it doesn't fill, then I may drop the line in the sand a bit closer to the stock. So we're going to try to get it. We may not. Market opens in 25 seconds. So while we're waiting, let me take you to calculations. This is all of this, by the way, is in the guidebook. So please get your free guidebook. Guess what? It's free. That's why we call it a free guidebook. All right, spread width is the distance between the strikes. All right, so in our case, 38, 37, 37, 38 is $1 wide. If we get 10 cents on that spread, then the maximum risk on the spread is the width, which is 1 minus the credit. So 1 minus the credit of 10 cents is 90 cents. And my potential return is 10 divided by 90, which is 11%. So that's where I'm getting my minimum 10%. We'll buy this back for a penny if we get filled, and then we'll net somewhere in the neighborhood of 10% after we close this thing down. All right, position sizing. Now, what I did here was I did 5 contracts. Okay, so 5 contracts times 10 cents is 50 cents, times the 100 shares controlled is $50. So we'll pull in $50 while risking 450. All right, so this is not a one contract game. You can do it with one contract. The numbers work. You can just play the numbers, and whatever money you're putting in will increase at roughly a 10% rate every 7 days over time. So that is in the guidebook. Let's go check out Roblox. And I can see here that the current price is not shown as a credit yet because the market makers are trying to balance all the orders out, and they're working the system. But currently that's not available. I'm going to give it a couple more minutes, and then what I'll consider doing is dropping my line in the sand maybe to 35. Ideally, this is a no-brainer up here because you have the 200-day average as support, as resistance. So I'm looking at support in round numbers is where they tend to go. 35 right here could be very good as well. But I'm going to let that breathe for a minute, and then we may drop it down. It's still showing a debit. So we may have to drop that down to 35. Let me pause. I'm not going to do it just yet. Why don't we, Ryan, see if anybody else has some stocks they're looking at?
Got 2 of them. Sorry, go ahead.
No, go ahead, bud.
Got 2 of them right now. George says ARM. That's ARM.
Yeah, I saw the news on that one. Good one, George. So let's take a look at what ARM is doing. This is in the semiconductor space, and sort of a darling. It's just been listed. In fact, back here, it hasn't even got a 200-day average yet. So this is the last earnings announcement, and they gapped up big, and now ARM is down here. Why? So you can trade technicals if you like, just technicals, but I also like to look at news. So why did ARM drop? You can go to Yahoo Finance. Most broker sites will have news. Let's check it out here. I'm just going to say ARM stock falls even though chip maker designer tops Q4 estimates. All right, so that to me is mixed news, right? So they top their Q4 estimates, and digging more deeply here, let's see why the stock dropped. And it must have to do with future guidance. Let me go ahead and go into a live news feed here that I use. And let's check this out as well. So you can see all the news items that are coming out. See, I don't like this one. Already, companies are coming out like Evercore saying maintains outperform. Let's see here. So ARM crushes earnings expectation, but stock falls as forecasts their future guidance lacks the wow factor. All right. And the stock is being hurt a little bit, but they crushed their earnings expectations. And is this like shooting fish in a barrel on ARM after they crushed earnings? They crushed earnings. Their future guidance wasn't what was expected. The stock's been taken behind the woodshed and beaten a little bit, spanked, but I see it holding at 100, and very likely we could see this one rise. So that news is mixed. Roblox's news was not. They missed on the earnings, and they issued a weaker outlook. So because it's mixed, I'm going to pass on that one. But George, good thing, a good example to take a look at. We really like to maximize our probability by stacking the news all in one direction. And here the news is mixed. I bet this stock bounces from here.
We also have Beyond in the chat, and then one more after that one.
Beyond.
Mm-hmm.
I eat
Beyond Meat.
I don't eat land animals, man. And so they have their fake meat is really good, man. BYND is the symbol. All right, let's see what happens here. Reports a Q1 loss. Lags revenue estimates. That's bad news. That's really bad news. Let's go into a live feed here and look at Beyond. They've reaffirmed their outlook, but their revenues were down. And then Goldman Sachs comes out and says, sell it. I shouldn't laugh. I'm laughing because when I see a sell recommendation, they're not very common, y'all. But Goldman Sachs says sell. Let's take a look at the stock. That's one of my favorite pieces of news because that recommendation is really quite rare compared to all the other recommendations. So let's throw up Beyond Meat here, BYND. This is a good one. And let's take a look and see what the stock's done. Yeah, it's plummeted. It's now finding support at 7. And what I love here is that we have this 200-day average. And the stock over here after earnings tried to get above the 200. And now the 200 is lagging as the stock's lagging. It's not a very expensive stock, of course, at $7 now. It was eight something yesterday. So if I could put my line in the sand somewhere, let's say up here at 9, think about this for a sec. Okay, earnings were not good. The stock is below the 200, now below the 50. That's the red line. Below the 50, currently trading at the low of the day. Of course, we're only in 7 minutes. So is the stock going to recover now above the 50, above 8, which is resistance, above the 200, and then 9? Probably not. Probably not. So my line in the sand would be at 9. Now, I don't know what's available at 9, but we can go look. Let me type in the symbol here. And I'm going to do 15-day options and see if there's anything at 9. Looks like there might be, actually. Let's go 9 and 10. Not quite enough here. There's 7 cents credit. So what I'm going to do on this one is let's go for 10 cents and we're going to fish. We're going to drop a hook in the water. It's only worth 7. And I don't want to go any closer. We could go a little bit closer. I would say maybe 850 would be good. So that's another option. I see the stock bouncing on 7. We could see a bit of a bounce. If it bounces just a little bit, we'd have a good shot of getting filled at the 9 strike there. You could, if you wished, drop this down to the tops of these bars, which is roughly 850. All right, so 850 would be a decent line in the sand as well. But because the stock is finding support at 7, and it already did bounce this morning up to here, up to the 50-day average. If we do get another bounce, then we have a very good chance of getting 10 cents. Currently, the mid price is 9, in fact. So let me go ahead and do 5 of these. I'll show you the order here in a minute. Confirm and send. And now let me give you the trade so it's really clear. You can see it right here. So we want to sell to open, the Beyond, May 24, 9 call. We just got it. We just got filled on Beyond Meat at 9. Now here's the filled order at 10 cents, excuse me. So we sold at 9, sold the 9 call for May 24, bought the 10. We nabbed 10 cents right there. So that order is filled. And now what you want to do is, let me give you I've got a spreadsheet to help with all this. So what just got filled was this. Beyond Meat, May 24, we sold the 9 call, bought the 10 call. All right, so we bought the 9 call. We sold the 9 call, excuse me. We bought the 10 call. We got 10 cents. Now what you want to do is if the most important part here, everybody, I'm going to get on my soapbox a little bit, is risk management. So if we're wrong and Beyond for some reason closes above 9 before May 24, when this trade expires, then you want to take it off for a loss. Number one rule. And then the other rule, the profit target, is to buy the spread back for 10% of what you sold it for, which in this case would be 1 cent. So immediately after filling, I'll show you how to do it right here. So immediately after filling, you can create the opposite order. And this is going to flip the battery in backwards, buying back the 9, selling the 10 that you originally bought. And we want to do that to close the trade out for 1 cent and do that good till cancel. There we go. Confirm and send. And now I don't have to worry about my profit. Already we're up. We could buy the spread back for 8.5 cents. So we're up a little bit on Beyond Meat already. Okay, so that will just fire off automatically. The only thing you need to do is keep an eye on your chart. And if the stock looks destined to close above 9, well, we're up here now. I moved it. There we go. If the stock closes above 9, then shut down the spread for a loss. Number one rule. All right. Great trade on Beyond. I love that one. And we're filled. Now let's go back to our original trade here on Roblox. And I'm only seeing 6.5 cents. Let's take a look at Roblox and see what it's doing live on the Hub software. Back to Roblox here. And let's see. Roblox is bouncing a bit off 30. Right there is 30. That's a round number. That has acting as support. The stock's starting to run up. We're trying to get 37 up here. Right about there is 37, I believe. Let me see. Yeah, just about. A little bit higher. All right. So with the stock rising, what happens is that this credit starts to rise as well. All right. It's not rising very much. It's only 4.5 cents. So here's what I'm going to do. Let's think about dropping. You know what? I'm going to let that one ride. I'm going to let that go. I was going to drop it to 35, maybe 36.50. Let's look at that. There's 36.50 is right at the 200-day average. So let's just lower this one. I'm going to use cancel replace here, and I'm just going to drop it to 36.50. All right, 50 cents closer to the heat. Sometimes, there we go. Let's do that. We got 9 cents mid. So what I'm going to do now is sell the 36.50, buy the 37.50 for May 24. I'm going to ask for 10 cents. Let's go ahead and confirm and send that one. And we have a really good chance of filling on that one. Currently, the mid price is 8 cents. A little bit more of a bounce. We'll get 2 more cents on Roblox. Very good chance of that filling today. Let me give you the new trade on Roblox so it's really clear for you all. All right, so we're going to be selling the 36.50, 37.50. All right, so we're going to sell the 36.50 call and buy the 37.50. I've got to change my spreadsheet here real quick here because it's not showing up correctly. There we go. Sell to open the Roblox May 24, 36.50, buy the 37.50. We're going to ask 10 cents, no less than 10 cents. Give me the trade or don't. And then we're going to get out of the trade when if the stock closes above 37.50. I'm going to change this again here. All right. And of course, you put your GTC order to buy the spread back for 10% of the original credit. All right. Simple, systems-based, rules-based. You follow the rules. You get on the show every week with me at 9:15. You'll start to master this strategy, and you too might be able to enjoy the benefits of high probability short-term trading. All right, everybody, that's a wrap for me today. Have an awesome week, and we will see you same time next week. Pura vida.